Hello and welcome to this video about how to pick stocks during coronavirus. Coronavirus is starting to spike again, and we are seeing record cases in the US and in Brazil. Technology stocks keep increasing and the US stock market is not reflecting what is happening in the economy. Stay tuned until the end of this video to find out the effective strategy that I am using to pick good value stocks in the current investing climate. Hey, it's Charlie here, helping you grow your entrepreneurial and investing profits on the side. That is what I want to achieve for the viewers of this channel, so if you are new here, consider subscribing. The stock market undoubtedly looks overvalued at the moment, and in the past 12 years, we've experienced the longest bull run in history, and stock prices were consistently increasing over this period until March of this year. Stocks plummeted in March and have since recovered a lot of ground. We had such an extended bull run from 2008 to 2020 for a lot of different reasons. There was a large stock market crash in 2008 from the real estate crisis. Global stocks decreased a lot in this period, meaning that there was a lot of room for growth, with the rebound lasting up to 12 years. If you invested at the lowest point of 2008 to the highest point of 2020, you would have made a return of 4 times the initial capital that you invested. Markets are still rising as well, and the reason for this is the main point of this video, and that is quantitative easing, rescue packages and low interest rates. Central banks have been printing cash to buy bonds and have flooded economies with cash. Every day we're seeing announcements about economies printing cash to shore up businesses and individuals. We know from economics that more cash in the economy increases the price of assets. When you hold assets like real estate or stocks, you benefit from bond buying decisions or from more cash being injected into an economy, if a central bank makes that announcement. When there is more cash in the economy, this drives up the value of those assets, making it good for the holders of them. If you are someone who owns real estate or stocks, then you should be happy when you see a bond buying program, a stimulus package, or low interest rates being announced in an economy that you're invested in. In Germany, there was a 130 billion rescue package in April. And if we look at the DAX index there, the chart for the past few months, we can see that the effects of this 130 billion rescue package has had a big effect on stocks in the economy. The US then injected 2.3 trillion in April, and the stock market has risen 30% from that decision. If you are sitting on growth stocks when this happens, then the value of your holdings increases substantially. These companies are becoming more overvalued as a result of this. In this sort of market, it is best to be invested in tech growth companies, because these trade on high multiples anyway, and in the current climate, tech businesses can continue with business as usual during coronavirus. Value investors have suffered over the past 12 years, and this is due to these cash injections. As an investor, you are in a much better position to be in a growth company compared to a value company when there is such a manipulation of cash in the economy from central banks and interest rates that they set. You now see growth companies like Tesla soaring to record highs of $1,300, and newbie investors thinking that they are experts because they ended up investing in Tesla. However, the reality is Tesla is getting these sort of highs because of the Fed's decision to lower interest rates and inject cash into the economy. Tesla and growth investors are being convinced more and more that they made correct investment decisions, but it is due to the Fed pumping more cash into the economy and reconfirming this for those investors. With this in mind, the best strategy is to invest in indexes once bond buying programs or cash injections, or as well as that, lower interest rates are leaked to the press. Hang in for this index then for the next 3 to 4 months, and then sell out and take your profits. Cash loses value the more it is printed and flooded into the economy, so it is good to hold some gold as a hedge against this devaluation of currencies. If you have gold and there is a stock market crash, gold performs very well, and then you can sell off your gold to buy stocks at a cheaper level with the profits you made from the gold. That is pretty much it for this video. Let me know what your thoughts are on the different tech stock companies and if you think they'll continue to increase, and in particular Tesla. I hope that you did get some value from this video. If you did, I ask you to smash that like button, and if you want to see more videos like this, consider subscribing to the channel. Thanks for watching.